So today is our third talk. The topic is impact investing. How is impact financed? And we are a couple of organizations within Esade that are organizing these events: Esade Careers, Esade Sud, Esade Alumni, and the Center for Social Impact. So today we have a great panel and the moderation of Guillermo Casasnovas. We have as a speaker Laura Cramer, Bernd Klosterkemper, Borja García, and Javier Benavides. So we have all these 5 impact talks. Today, as I said, is the third, and then I will invite you to sign up for the upcoming that will be next week. So for now, this is all the information. At the end of the talk, we will have time for you for your questions that you can write in the chat or either raise your hand and ask to the speakers. So Guillermo, I turn to you.
Okay, thank you, Dalia, very much for this introduction. Thank you everyone for being here. It's really my pleasure to be here today and to share the stage with these amazing panelists. So I'm sure that we'll take a lot out of this session. So yeah, my idea our idea for the panel is that we will make it as conversational as possible. I was telling this to them before. We have many topics that we want to cover and not that much time. So we'll also try to do short answers and also leave some time in the end for some questions and answers also with the audience. Okay, so I think we are going to jump straight away into it. Just let me, so I am Guillermo Casasnovas, as Dalia mentioned, a professor at Esade at the Society, Politics and Sustainability Department, and also a member of Esade's Center for Social Impact. And I will let the panelists now introduce themselves, like in a minute. Just say who you are, your name, your organization, and your current position. Okay, so maybe Laura, do you want to start?
Sure. Hi, everybody. Great to see you. So my name is Laura Cramer. I'm investment director at Rubio Impact Ventures, part of the founding team. And what Rubio does is we're an impact investing fund. So we invest in entrepreneurs that solve societal issues, but with a smart and scalable business model. Happy to meet you all.
Thank you, Laura. Borja, do you want to go on?
Thank you, Guillermo. Really nice to meet you all. My name is Borja Garcia. I'm the head of structuring and Latin leads in Citi Social Finance. Citi Social Finance is a team that works across emerging markets in Africa, Asia, and Latin America, and I'm mainly responsible for all the structuring and all the work that we do with multilateral banks and development finance institutions, and also responsible for all the Latin American strategy and investments that we do. We mainly focus on financial inclusion, access to basic services, and access to basic infrastructure, but I can explain more later. Thank you.
Thank you. Bernd, do you want to follow?
Sure. Hi, I'm Bernd. Thank you for having me. And I am partner with Ananda Impact Ventures. We are an impact venture capital fund based in Munich and in London. And we are active since a bit more than 10 years now, investing out of our 4th fund in 31 companies so far throughout Europe. And yeah, looking forward to have a good discussion with you.
Thank you. And Javier?
Thank you, everyone. I'm Javier Benavides from Agora Partnerships. I work together with my team in all financial efforts towards impact investing and ecosystem creation for the 3 Americas, specifically Mexico's, Central America, and the Andean region. So I'm very happy to be here, and welcome to everyone.
Thank you, Javier, and thank you, everyone. And as you see, we have a very international panel, no? From Peru to the UK, to Germany, Netherlands, and Dalia and myself, we are in Spain, in Barcelona. So very, very happy to have you all here. After introducing yourself, and this panel is about impact investing, but we know that sometimes we understand impact investing in different ways, no? Depending on the organization and depending on who you ask. So I wanted to ask you first, no, what does impact investing mean for you, and how is in your, no, from your perspective, how is it different from other approaches like ESG investing or more philanthropic approaches? I know, Laura, do you want to start?
Sure, happy to go first. Yeah, so for me, impact investing, there are two crucial points. So one of them is that the impact is in the core of the company, so in the product or the service that the company offers. But on the other side, that also impact scales with the business. And that, I think, is where it really differs from philanthropy, where the business side of things is not as important, and where it differs from ESG, where usually doing good is something that comes with the business and is not in the core of what a company is going after.
Thank you. Maybe Javier, do you want to follow?
Thank you. And actually, for me, impact financing differs from regular financing, and in that we are looking for results. That's true. But we're looking for, here the coin, it's well-being. So we're looking for results in not only in terms of money, but also in terms of environmentally sound results and obviously social results as well.
Great. Bernd?
I think more or less, or I completely agree with what Laura also said. I think we have very similar definitions. So yeah, ESG is more like a set of criteria where which you take into account when measuring performance of an investment. Whereas in impact investing, really this positive change is in the midst of your investment decision. So you really want to achieve a positive change with your investment. And versus philanthropy, it's about a return that you expect a return for your investment. And in our particular case, I think so. Impact investing as such, I think, is pretty broad in terms of expectation on returns. In our case, we say, well, we definitely aim at market rate returns or even above market rate returns, because the principle in our investments is that we only invest if the mission, the impact, like Laura also mentioned, is in lockstep with the business model of the company. So you cannot take it apart. So if you scale the company and if you make the company successful, you scale both your financial return as well as your impact. So there is no trade-off whether you do a little bit more like impact or a little bit more financial return. It's about making the company successful, making the innovation, the business model successful, and then both sides scale.
I think you'll find me and Bernd agreeing a lot tonight. I think our philosophy of Ananda and Rubio are pretty alike.
Good. No, I see that you both look for this sweet spot where impact and financial returns go hand in hand. And maybe later you can tell us if there are many opportunities to invest there or what kind of challenges you might find, but we can talk more about that later. Let me ask first, Borja, what is your perspective on impact investing and how do you define it at Citi?
I think for me, I'm very brief, maybe not a way that we define it in Citi, but that we used to define. I used to work for CSC Group, the UK development finance institution. So we say that it was doing good without losing money is how we used to say when I was there. And I think that is also applicable to us, but let me keep it there and we can continue the conversation.
Okay, thank you. So not necessarily looking for these market rate returns that Bernd was talking about, but there are we understand that there are different, there is a spectrum that you can look for different type of returns. Perfect. And in terms of specific impact sectors that your organizations are investing in and working on, education, climate change, or other specific impact sectors, are you kind of a focused investor, Borja, in your case, for example, at Citi?
Yeah, in my case, we always say that we are the S in ESG. Obviously, Citi has a very big commitments for sustainability, which includes 500 billion for green and 500 billion for social. But my team is really focused only in emerging market and only on the S. And when we talk about the S, we talk about financial inclusion through financial institutions and microfinance institutions, access to basic services, including health, education, food security, and access to basic infrastructure, which include water, sanitation, telecommunications, clean energy, and transportation. This is in what we focus.
Great. Javier, what about you?
Well, actually, in Agora, we work very, very deeply in investing resources more than money. We are the perfect company for those who want to invest money in impact. But the more we do is trying to do better capacity building to entrepreneurs and small and growing businesses in the 3 Americas, and trying to build a solid ecosystem that makes everyone help each other and help investors to find the perfect spots to invest in.
Great. And Laura and Bernd, in what sectors do you find these opportunities where, as we were saying, impact and returns go hand in hand?
And the question is, who goes first, Anna? Yeah, Laura and Bernd. So we are a generalistic fund, but we have specific segments that we specialize in within our fund. So you can come to me with anything that helps our planet. So anything climate related, we call it circular solutions. So on one hand, for example, accelerating the energy transition, but also smart use of resources, circular economy, it's sometimes called. And then we have 2 other key segments. One is called people power. That has everything to do with giving equal opportunities to everybody around. So think about investments in education and work. And the last segment is healthy living. How can we get to a happy and healthy old age? Think about preventative healthcare, but also food is an important topic there. So I think that pretty much summarizes the companies that we're going after. Over to you, Bernd.
Yeah. I think one important focus is, I think, Laura, you also have that is a regional focus. We only invest in companies that are based in Europe. So that makes it a bit smaller, and their core impact should also be in Europe. So that limits a bit, but within that limits or geographic limits, we are also generic funds, so also investing in all kinds of social topics like education or healthcare or aging society or data security. And at the same time in sustainability topics, whether it's regenerative farming or whether it's protection of wildfires. So pretty broad, and within that, like Laura also mentioned, having some investment thesis and some core topics where we are active in.
Perfect.
Are you still mostly investing in Germany, or is it all over Europe now?
It is. I mean, basically, it is all over Europe, where
Nice.
with the German-speaking countries and UK being kind of the home turf, where we do all kinds of also often lead investments, and Benelux and Scandinavia being also pretty near, where we also have quite an active portfolio. In other regions like Spain, we mostly do co-investments.
Thank you. Do you guys think that impact investing, maybe in the early years, it was more about investing in developing countries, and now more and more funds that are based in Europe or in the US are investing in their domestic markets?
Yeah, I think a bit like that. I mean, we always have been focused on Europe because we thought, okay, it is already complicated enough to measure impact and to try to distinguish between thinking something is good and actually really achieving something good. So that's why we limited ourselves on Europe first. But there has been lots of global South focused funds out there, and it seems like they are still there and they are still growing. But the idea of impact investing also in the developed world, I think that idea has come to a broader acceptance over the last 10 years.
I think in general, venture capitalism was a very nascent market in Europe. And over the past years, you've seen lots of new funds entering the market, also in impact.
Yeah, thank you. Borja, in your case, as I understand, most of the work you do is in Latin America, but also you do projects in Africa, Asia, and other places. And when you were defining impact investing, you were saying doing good or having a lot of impact without losing money. Now that you are at Citi, in those projects where you invest, what are the minimum kind of financial requirements, or in what terms do you ask for financial sustainability or financial profitability in those projects?
In terms of financial sustainability, basically what we do is we recently have issued a 1 billion social bond, and obviously, as you might know, all these bonds, thematic bonds, we follow a framework So this framework is really clear in terms of the kind of sectors, the eligibility criteria, the indicators that we have to follow. And again, although we issued the bond last year, this is something that Citi Social Finance has been doing during the last 15 years. As of today, we have mobilized more than 4 billion in the sectors that I mentioned. So in terms of financial sustainability, the focus is always in low and lower middle income population. And as I said, this is very described by the framework in terms of the eligibility criteria and the indicators. And then in terms of financial returns, to be honest with you, we don't have a special bucket of money. We just follow the same rules and credit policies that the bank has for other business. You might be thinking that obviously this is a bit challenging, right, when you are doing these kind of transactions. But the way that we do it is working a lot with development finance institutions, multilateral development banks. We have programs with them, with, for example, the Asia Development Bank, with DFC, which is the UK, the DFI for the US government, with risk-sharing programs in which we share the risk with them, in the majority of the cases on a 50-50 basis. So we try to do a bit of blended finance on that cases. But yeah, we have clean exposure to these names and to these projects, and it's how we do it. So we don't have a minimum. It's depends on the country and depends on the minimum, but we follow the minimum returns that we need to have as a bank.
Okay, fantastic. Javier, in your case, you were saying that you don't invest directly, right, into the companies, that you have these alliances or partnerships with others that then invest and help finance the needs of social entrepreneurs. Can you tell us a bit more about how you do these alliances and maybe some examples?
Sure. And let me set an example as a first. We've been working last year, by the end of last year, with the Christian Relief Services towards converting part of their operations from philanthropy towards impact investing. And the first struggle was, okay, we want to help farmers in Nicaragua, a very difficult country, but how do we go from giving money to investing? And the main question is, we have to prepare those communities, cooperatives basically, to set up their financial status, their financial statements, how to prepare themselves to develop business plans, and we were in charge of that mission. And suddenly we developed a certain impact culture in those people, because they are our first stakeholders. First, setting up a consciousness of, okay, we fight as a first for our well-being, but secondly, once this is covered, we have to check if we are doing something sound environmentally speaking. And are we looking forward to combat or fight the gender gap? So, and when we set it up all together, we were looking more into just giving loans, very, very low interest loans, but searching for impact. And that was a change not only for the communities we were working with, but also for these originally donors that converted themselves into investors. And we are working as well with the Center of Promotion for the SMEs in Central America. We are doing exactly the same, helping them forming an investment fund in solving part of the gender gap in financing SMEs led by women. So this is part of the work we do.
Great. So I see that there's this cultural change, of moving from philanthropy to more investing approach. But then there is the cultural change as well of assuming that these organizations are having great impact to actually measuring what impact they are having. You were mentioning in terms of gender equality or environmental impacts and things like this. I want to ask to Bernd and Laura, again, in your cases, how do you do this impact measurement part? Both for what do you ask of the impact of the investees, of the organizations that you are investing in, to how do they need to measure their impact in order to be investable by you, but also yourselves, as an impact investing fund, how do you measure your own impact? Bernd, do you want to start now?
So now with that, I need to go first, I think, this time. So on the impact measurement, I think, so it all starts with the core, a very simple question that you ask the founders, the team you're talking to, and is that, what do you want to achieve? What do you want to change? And try to phrase this in one sentence. And then you go from that very brief theory of change, how we call it, and then we do a bit more of background work on an impact map framework. I don't know whether some of you are aware of that framework. And through that framework, which measures inputs, activities, output, outcomes, like a value chain kind of thing, we try to come up with KPIs, with indicators for how can we measure, or how could the output and the outcome of that company be measured. Then we set targets. We choose a number of key KPIs, and we set ourselves targets that we want to achieve over lifetime. To make it a bit more concrete, so one of our investments is a tablet that's being used by senior patients, dementia patients in care homes. The goal of that company is obviously to add to the joy of life for people when suffering from dementia. And then we go through that process, and in the end, it's pretty simple, clear KPIs. It's about the number of seniors actually using the tablet as a indicator for how much scale do you achieve. And then there's another one about the quality of the intervention you're having. So it's about how often is the tablet being used per week by that senior, as a proxy for how meaningful is that for that person. And thirdly, it's about how much, and that is more a survey question, how much does it add joy to the life of that patient or that senior person. So pretty simple in the end. It's just a very logical way of coming up with these KPIs and then setting targets in the beginning. And now coming back to your question, how can you measure ourselves on a portfolio level? That is super tricky because on the financial side, you have this return number that you can easily calculate. On the impact side, the difficulty comes from if you compare, like in this example, how many seniors could you help with this tablet? How can you compare whether you help 1,000 seniors versus you save 1,000 tons of CO2? How do you measure that? And there is no simple common currency how to measure this on a portfolio level when you're achieving some different kinds of impacts. So what we came up with, and many funds in Europe use this nowadays, is okay. We set these targets in the beginning, so let's measure ourselves against these targets over lifetime of the portfolio companies, and then weigh this target achievement with the amount of money that went into this company, and then you have like a target achievement on a portfolio level that we are being measured against, and where our compensation in the end as a fund manager also depends on.
Okay, perfect. So yeah, Laura, do you want to?
Yeah, not a lot to add. Just here, Bernd. And I think what would be interesting to mention is that 7 years back when we started, and I think 10 years back when Bernd started, this tying impact and ingraining it in the core investment processes of the fund, and even tying it to your own remuneration, was something that was really unheard of. And still, I think a lot of venture funds find it pretty scary thought that you have impact driving your financial performance and bonus. But I really love that currently you see more and more impact funds or new funds adopting this philosophy and basically practicing what they preach. So I think that's a great trend we currently see in the market.
And you also see this difficulty to standardize across your portfolio. So you also have like more specific indicators for each of the companies you invest in. Exactly.
I think on a planet side, you already see that impact measurement is a bit more advanced and more harmonized. So carbon footprint is a language a lot of companies in the climate space speak. So that is one that you can more easily compare, but especially like in the people power segment, for example, it's often about lives, fulfilled lives, well-being, which is not as standardized as a carbon footprint or greenhouse gas emissions.
Yeah. And you all know the Sustainable Development Goals, no? The SDGs and the 2030 Agenda. Is there a framework that do you use in your organizations to, I don't know if it's maybe to measure the impact or to report the impact or or to decide and to set your strategy in the beginning? I don't know, Borja, what about Citi? Do you use?
Yeah, as I mentioned before, basically we issue a social bond. So when you issue this kind of thematic bonds, you need to put in place a framework. In our case, and this is public. So by the way, it's available to all of you if you want to take a look. I'm happy to share after the call as well. And there you have very clear the kind of sectors, the eligibility criteria, and the indicators that you are going to be using. And again, and this is public and you have to report back to your investors. This is basically what we use. So we use that indicators and that eligibility criteria in all the transactions that we do. Around 70% of what we do is debt transactions. So we include that in the legal documentation, and then the clients report on a quarterly basis information. And this is what we have to report back to investors. In our case, we have the targets of reaching 10 million of households, of which 10 million are going to be women because of the social angle that we have by 2025. So this is something that we are monitoring really closely.
Okay, fantastic. Javier, what about Agora? Do you also make use of the SDG framework? We don't hear you.
Sorry, we also use them, and we try to do something together with our partners. So we many times we also use some iris indicators as well, and but on the other side, it's like actually many of you have been studying their first courses in finance. We are dealing with net present value, internal rate of return, but it changes all when you change the currency. When the currency is well-being, when the currency is sustainability for our human race, everything changes. So if you try to measure that, we have to mix a bit. It's like changing currencies from euro to sustainability to Mexican pesos. It all comes adding up in terms of finding the perfect balance, and we all are on the search for that for that perfect combination, which is very tricky. So and we have to also talk a little bit more in terms of having a common currency in that term. So this is the task now. This is a challenge. And we're up to that. Yeah.
Laura, what do you think? Is that a useful framework for you guys, the SDGs, or maybe for the investors that invest in your fund?
Yeah, we try to align as much as possible. Usually it's a bit too broad for like really deal specific targets, but it helps to communicate and align and find this common language that Javier was talking about. So yes.
Thank you. Bernd, what about you?
Sorry to again buy into what Laura said. Yeah, or to be a bit provocative, I think it does a great job for marketing and communication, but it's poor for impact management and optimization. It's too simple, and I mean, or at least the way it is often used. I mean, you can use it in a more profound way, but then it gets really complicated if you try to really map the dependencies amongst the different SDGs. Then it's super complex. So yes, we use it for communication and marketing, but we don't use it to really actually manage our impact.
Okay, so you were now having this kind of provocative view. You were saying that sometimes people might use maybe the SDGs or other frameworks just as a mechanism for marketing, but then not doing actually a work that is really impact oriented. No? That's what we sometimes call impact washing. Do you think that is a challenge in the impact investing industry, or what other challenges or what other trends and opportunities do you see in the sector? I don't know who wants to start.
Yeah, I mean, I can give my view, but yeah, definitely, I think there are many. social washing or greenwashing out there. I think that again, normally what you have to do is have external verification, and even in some cases when you do that, some people can say that it's not really a verification. In the case of Citi, as I was explaining, it's not only that you issue the bond and then you have to report. Is like we have Sustainalytics that do like an audit of everything that we do in terms of financial sustainability impact and development impact, as we call it. So they can every year to do exactly to see if the numbers that we are saying out and the impact that we are saying that we're having is true, right? I completely understand that there might be people that even say that, yeah, these audits are not really good enough, but I think that having someone external doing the audit in the work that you do is like a point for verify that. If you don't have it, again, you can be see as doing greenwashing and social washing, right?
Yeah. What about the others? What trends and challenges and opportunities do you see out there?
Yeah, so I think the green sauce is helping a lot of venture funds raising money at the moment. So I think there's definitely a risk of funds using it in marketing, but not actually practicing it. To me, I think the best test is, do you remunerate yourself based on the impact you're trying to achieve? And if that's a very scary thing to do, then, well, you can imagine that maybe impact is not so much at the core of the organization or the investment fund.
Good point.
I agree, and at the same time, I'm glad that we are talking about impact washing, greenwashing, whitewashing, whatever. I mean, 5 years ago, probably also Laura, when you started with Rubio, and then also when we started, I mean, it was all. I mean, traditional VCs would more like look at us and say, okay, what are they doing there? And
a weird
like,
fluffy one somewhere.
Yeah, and you need to defend yourself that you put money and try to do something good with that. You're super naive or whatever. And now they all try to imitate you. So I mean that's quite a nice change of power in that whole game. And so I think we can be lucky to have that discussion. And at the same time, yes, we need to be cautious there.
I do think there's like the EU is working on quite some standards and standardizations to help regulate impact funds and different types of funds in the space.
Perfect. Javier, do you want to answer that as well?
Well, actually, I want to take one word Bernd said. It was about naivety. We have to go back to naivety a bit more, because naivety is power. It's the new power. We need that in terms of making a better world, but making better businesses as well. And it all should come together. As I will keep repeating myself, that well-being is the next currency. And if you see it all that way, it all starts to make sense. And we have there impact investing is a tricky monster because many times people try to compare it with venture capital, and it's not, definitely not, in terms of risk. And we have to measure the risk differently here. We are looking for something very, very different, and it comes not only for startups or for companies, but also for communities. So we are looking at something very, 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 very different, and that's evolving very rapidly.
Thank you. I wanted to ask you a couple of questions about careers, because we have many students in the audience. Maybe some of them want to have careers linked to impact somehow, maybe some of them specifically in impact investing, in this broader sector. So I wanted to ask you, the four of you, what specific kind of personal, academic, professional experiences have you had during your career that have been relevant and that have helped you be successful in the positions, in the jobs that you have right now? What do you? I see Laura nodding. Do you want to? Or Borja,
That's right.
please.
Yeah. Yeah, no, in my case, basically, I did all my career in multilateral banks and DFIs. I started working for the Inter-American Development Bank, working in Washington, covering Latin America. Then I moved to London to work to the EBRD. Then I moved a bit to Deutsche Bank and then back to CDC Group. But I think that's obviously everything that I have learned in these institutions that really, I mean, basically what they do is impact investing or sustainable finance. Is the kind of skills that has allowed me now to move to an institution like Citi, working on the private sector, because I am a true believer that these institutions like World Bank, IFC, and IDBs can really do it alone. So I think that the private sector need to also play a role in all of this, right? So in my case, I think that all the skills, experience, and work that I have done in these institutions are allowing me now to come to an institution like Citi and try to put that impact or social lens in everything that we do in the bank, right?
Thank you. Who else? Bernd?
Yeah, I think the nice thing is there are so many various ways on how to end up in impact investing. So I would encourage anyone with whatever background to think about that career. But in my case, I think, and we also as an organization, we feel it's a big advantage if you know how it feels to be on the other side of the table as an investor. So for me, it was being myself an entrepreneur and building a company. I think that is super valuable in my position now to just know how it feels in certain situations and how different it is, whether you're at the forefront and it's your team and you're trying to achieve these things yourself. And I wasn't an impact entrepreneur. I was just a regular entrepreneur. So I have even more huge respect for the ones that not only take the challenge of building a company, but at the same time also building an impactful company. And this respect, I think, is good to have as an investor.
Thank you.
Actually, I'm on the other side of Bernd. I've been an unusual investor, and now I am impact investor. And it's very funny because you start seeing things that people need, that your community needs, that the world needs. And if you don't do anything with that, then you start aching in your heart. And if you see your community and you don't see change, you have to manage to make change happen. And that's what we need in impact investing. This is the only commodity I think it's pretty needed in the industry. And if it doesn't come with a career, but with what you're learning in the school. In terms of Esade, please keep your eye on those professors that advocate for change and your fellows that advocate for change. These people are key and will make everything happen.
Thank you, Laura. In your case, you studied your master's at Esade, no? I think so. Did we prepare
so
you well
all
for
at the perfect route towards impact investing already.
Yeah.
I did finance in Esade, and actually Esade was like a big front runner in terms of social impact back then. I think there was already like a social impact initiative with a lot of students involved. When it was really one of the first universities, I think, in Europe actively participating in that field. So finance obviously is a very good basis if you're becoming an investor, because even though impact is the core, understanding a business case, understanding returns and analyzing financials is still part of the investment decision. But I agree completely with Bernd that there's so many routes towards becoming an investor. Having this entrepreneurial background is super helpful. But also having deep expertise on a specific field, for example, if you're investing in the energy transition, then that background obviously really helps with understanding where the key problems are. But in the end, I think if you want to become a great investor, just starting in investing and just starting doing it is the best way to become good at it, because it's not a skill you learn from books. It's every investment. I think Javier, Borja, and Bernd will all agree. every investment is so different again. Like there's different nuances, different people. That's what makes it super exciting as well. It's never boring.
And maybe if I can quickly add, because one question that I will receive is, do you need a finance background to work in impact investing? And what I always say is, if you really want to work in an investment team, and I always honest on this, I think that you need a bit of background, but impact investing is more than that, right? Particularly in DFIs, in private sector banks like here, you have people working in things like gender, environmental, development impact. So impact investing is not only invest, you can be working in other teams across the institution, and you don't need that finance background, right, as well.
Yeah, definitely. Okay, we have like 15 or a bit more minutes left. I want to leave some room for questions from the audience. I think Dalia already said that you can post your questions in the chat box if you want, but if you want to also kind of raise your hand through Zoom or even just unmute and ask the question, please feel free. I think we will have time for 2 or 3 questions probably.
I'm impressed that there's still quite some faces on the screen. I appreciate it.
Yeah. I see it's Jarvin.
Yes. Good to see you again, Laura. I have one question, but it's for everybody, I would say. So currently more and more funds are being raised, more and more new venture capital funds being established and focusing on the impact. My question would be, is the market deep enough to, as you also mentioned earlier, it should be a combination of actually making the impact, but also delivering returns. Is the market deep enough at the moment to find for all these new companies, larger fund sizes, to find all these companies that can combine both?
Very good question. Who wants to answer?
I can kick off, and then I think Bernd will sure add to it. So I don't think all funds that are raising right now will be successful. There's really a lot of money in a lot of different funds. But I think what we shouldn't underestimate is that all new companies being started, I hardly see any that don't have this vision on changing the world in the outset of the company. So really new entrepreneurs, they see making a difference on the world as a license to operate, and hence also integrated in their companies. So there's a lot of new talent entering the market, and hence with the years to come, also a lot of amazing companies that can be financed by impact companies. But Bernd, curious to hear what your perspective is.
No, exactly. No, yeah, exactly. And really, again, if I compare what has changed most or more, which of the both sides, supply of capital or supply of talent within the sector on the startup and founder side, I certainly say it's the amount of talent that changed most. Capital, to be honest, a bit was never really the huge problem in fundraising, but in the beginning it was really about the talent. There was not that many super professional teams and many very motivated and mission driven teams, but not that professional in the way that you see nowadays, because nowadays you see I would say the best talent not only taking the challenge of building a company, but they also want to do something good for the world and our society. And that's the perfect motivation. And you see the best talent building impactful companies, or even entrepreneurs who built a company before, which was maybe not that purposeful, and now say, well, now we want to do something really, really purposeful. And then you have a serial entrepreneur being on the side of impact, so yeah, I'm optimistic. And overall, you always have the question of, okay, is there oversupply of capital in certain markets, whether it's private equity or venture capital or anything, but as such, I think yes, we see so much talent. I'm positive there.
Thank you, Bernd. Yeah, I agree. That's something we see at Esade as well. No, so more and more young people and entrepreneurs also know they want to have careers and start projects that have this impact or this purpose at the center of it. No? So I think that will help create a pipeline for all these new funds, impact investing funds that are being raised. There is a question here in the chat.
I gotta say, it's big change what Bernd says. Like, this is really something from the last 5 years, I'd say. This new generation is really doing things differently. So keep it up.
Okay. Thank you. There is a question here in the chat from Monica. She's asking about the differences and similarities in terms of challenges and opportunities between doing impact investing in developed countries or in developing countries, or emerging countries. I guess in your case, Borja and Javier, you are investing more in developing countries, Bernd and Laura more in developed countries, but probably you both could speak to this, no, Borja?
Yeah, I think for developing markets, obviously the first thing is there is appetite, because you don't have, I mean, depends on the appetite as an investor that you have. I think that's this is one of the challenges. Then how to mobilize capital, because normally I would say in developed markets, you can have maybe more private sector investors willing to invest. In emerging markets now, the industry is moving there, but it's mainly through private equity impact investing funds, multilateral banks, development finance institutions. But I think that is the main challenge, right? And obviously that the financial resources that you have in terms of the kind of facilities for long-term lending, equity available is not the same in development markets that developed markets, but at least that's my view.
Thank you.
Yeah, in my side, well, I have a very controversial opinion here, because it depends. Many times impact investing is a good business wherever you are the farthest away from your comfort zone. And we are built to confront problems that are all around the world, and it depends on how comfortable you are. Perhaps several months ago, the Ministry of Labor in Switzerland issued a report where they were comfortable with the gender gap in terms of financial inclusion for women being lagging 5% towards men. If you're comfortable with that, that's not a business for impact investing. But if you want to really make a change, then that's your business. And that's something that it's the very same in emerging countries and developed countries. We are working together with Sempramipe, which is the Center for the Promotion of SMEs in Central America, trying to get up a fund, but that will start with $4 million, 3.5 million euros. But that's nothing in terms of the gap, of the financial gap for women in this region, which is around 1,000 million euros. So what are we talking about? Are we talking about your opportunities? There's a lot of them. But how much are you willing to do business and help to solve the gender gap when there's a billion or $1,000 million opportunity? That's the question that should go to you, and that's the question that should go to all of us.
Thank you, Javier. Do you have any other questions? Yes, here. So what role do you think new digital technologies such as AI, cryptocurrencies can play in impact investing? Also, how can someone from this background generate value for impact investing funds? So the role of all these technologies, Laura, what do you think?
Yeah, so I think cryptocurrency is a topic I'm very engaged with at the moment, because I'm trying to find an impact angle. So if anybody would have interesting suggestions here, feel free to reach out. Because I do see like the systemic impact a non-financial institution related cryptocurrency system could have, but the amount of energy currently that's necessary to come up with the cryptocurrency system that works is incredible. It's not something that we would want to impose on our already stressed energy system today. So I'm not sure yet what cryptocurrencies, what role they could play in really enabling social change. But obviously digital technologies like AI, we've invested in a company that enables you as a person to check whether you have carcinogens on your skin by taking pictures. which really reduces the pressure on the healthcare system, but makes it much more easier for you to prevent getting really ill. So it can really be an accelerator in a lot of social issues to use these smart technologies.
Thank you. I don't know if there is any of my students here, but last week we had a class where we had a venture capital investor come in, and he was talking about blockchain and all these things. And he said that more and more all these financial institutions, they want people with this background. No? So at least that they understand the possibilities that all the Web 3.0 blockchain technologies, etc., can bring, and how they can disrupt different industries. No? And I also know a woman that is actually an alumni from Esade as well, and she started actually a venture capital firm where they are investing in projects, in blockchain-based projects that are doing things on the microfinance world. So that's one application, no, for
traceability is often
so the possibilities of decentralized finance, no, that you can reach many people without the need of having something very centralized. No? That's probably a possibility. No? But I agree that there are many options out there, and a lot of opportunities for people who actually have this background and know how to deal with it. Okay, I see many questions here, so let me go one by one. Seems like measuring social environmental impact is not standardized yet. What tools or approaches would you suggest to have trustworthy ways of measuring impact and not falling into impact washing? I think we already mentioned, no, that in some of your cases you go project by project, no, and trying to find certain indicators that tell you about the impact that those investees are having. Also, no, reporting, transparency. Bernd, what would you say?
Yeah, I think don't get too complicated with that and too theoretical. I think if you're really honest and serious about your mission and that you want to achieve an impact, just be honest to yourself and say, okay, what is the best way to measure whether I'm on the right track? And then don't stop with something superficial, but really think about, okay, what in the end do I want to achieve, and how can I measure it, and just show that. I think so the impact washing is more for someone who's not honest and not really serious about achieving that. But if you have that mission at heart, don't get too complicated with measuring it, and be open to optimize it over time. If you get further down with your operations, then you also can afford better ways to measure it. So now don't get too complicated with that.
Thank you. There is a question also, and Borja, you can ask this, and Laura and Bernd as well, about who are the investors that are investing in your funds? No, are they different from those that invest in other types of funds, or in the bond that you issued, Borja? Who are these investors?
Yeah, all the activity that we do on a direct way is on the Citi balance sheet. So we are in some way investor. And then on the bond side, that is the question of who are investing, is mainly institutional investors, right? So we are seeing a lot of pension funds, asset managers, other impact investors investing on the bond. But it's mainly private sector who is putting capital there. And we are seeing, and also maybe something important to mention as well, we have a differential in price when we issue the bond, just because it's a social bond, right? So investors are willing to pay more for the bond if you are going to be putting on impact, and we saw that with the bond that we issue in October.
Perfect. Bernd, Laura, who are the investors in your funds?
Well, originally it has been wealthy families. That is the backbone of our first fund, and then, but also in our first fund there was already an institutional bank, the UniCredit Bank, and then Deutsche Bank was in the second fund, and the European Investment Fund. So there has always been also institutional investors in our fund, and for them it was maybe more finding out about this investment discipline, maybe, or this strange animal impact investing, and finding out how it really works. And for the private ones, it's really, they're as mission aligned with us as we are in, okay, let's really try to find these great entrepreneurs and support them who build something meaningful and purposeful. So we are pretty aligned with our investors on this dual mission of using entrepreneurial ways to solve societal problems.
Thank you. We have just a couple of minutes left, so I think we need to start wrapping this up. I wanted to just ask you like a final question for each of you, and maybe we can use one of the questions that is in the chat, which is about one of the moments that you feel most proud of in your impact investing careers. So if you can share that very quickly in one sentence, and then I will hand it over to Dalia for closing. Laura, do you want to start?
Sure, most proud. Actually, I'm the most proud when I see like new students like you that have heard about impact investing actually entering the market, starting new funds, starting companies with an impact mission. That is when I see a good future for all of us.
Thank you. Borja?
To me, the most important is like sometimes you are very isolated. I mean, I'm sitting here in London and sometimes you feel isolated. So to me, the most important is when you go to when you visit your final users, right? And you visit these microfinance users and you really see the impact that you are making with the transactions that you're doing. So this is really something that I'm very proud when I go to the emerging markets.
Thank you. Javier, what about you?
I agree totally with Borja. Visiting the final user of the money, it's great, and seeing results. And many times you don't see results, you see failure, but they could still come up to you and try to solve things together, and that's great as well.
Thank you. Bernd?
Yeah, maybe to most proud of that I have started that career, and when it was not that sexy, and just because I was so convinced of that is the right environment for me, and that's the right step for me, because I felt like I that's what I want to do, and that would be my advice to you, to really follow whatever you think is good for you, and where you feel good for yourself, and follow that route, and not follow a plan that someone else tells you. It's really follow your own feelings and where your heartbeat is. But I need to warn you, if you take the step towards impact investing, there's probably no way back. It is so cool. And it tastes so sweet. So really be cautious. If you take that step, no way back.
Yeah, good. So I think it's a very good way to finish. I would like to thank you, everyone, all for your attention, for your questions. A special thanks to Borja, Javier, to Bernd, to Laura, for sharing your experience and the lessons that you have learned in your careers. And a pleasure for me being here. And I will hand it over to Dalia for wrapping up.
Thank you, Guillermo, and thank you all the speakers for this great conversation, for all the insights, learnings, and thank you everyone for joining us today.